Good morning, good afternoon, good evening, wherever you're watching me today. My name is Peter. Welcome back to Invest with Peter. So today I'm going to be talking about why I think China is in trouble. I'll give us some issues around, New York Stock Exchange. So now, what am I talking about today? Right? See, I'm going to be talking about a different thing entirely today where, people will be saying, if you want to invest safe, you better invest in index fund, ETF, S&P 500 ETF and all that stuff. But I'm going to be saying they don't want to tell you where you can make the real money in the stock market. And that's why you are probably not making money in the stock market, right? See, all these things are what institutions invest in, but they will never tell you to do that. They will tell you, to be safe, invest in bonds, invest in index fund and all that stuff. That's nonsense. Someone who invested $4,000 in 2010 actually have over $190,000 in his portfolio today. There are four companies he invested in. I'll be talking about today. And if you want to take that step and invest in those companies, maybe by 2030 or by 2032, you probably have $250,000 in your account. So today, let's go. I actually saw a different thing entirely in the market. And that's why, as an investor, I take my own investing system or pattern different to so many other people, because I always say I don't sell when it's red. I sell my stock when they're green. I only sell if I see the fundamental has changed about this company. That's when I sell out of the company. I don't care if the company is down 80% today. I don't care. I've seen the future of the company, what it's going to do in the future, how it's going to change the way we live. And that's why I still keep my company. So I don't just jump over different company like that. If I sell out, I sell out maybe to take some profit. And I always sell when my stock is green. I don't sell when it's red. All right, let's go through it, right? So there are companies I'm going to be talking about today, which I call the disruptors, and you probably believe they are disruptors. So the first one I'll be talking about today is Tesla. Tesla was IPO'd January 2010, and the stock of Tesla went for $17 for one Tesla stock. So if you are actually invested in Tesla, right, around, let's say you invested $1,000 in Tesla in 2010, I'll be telling you how much you'll be having today. But before you go into this, to the meat and, the nitty and gritties of this today's stuff, I'll be talking about China and how it's going to be affecting us. Well, the rolling runner in China is up again, and it's really, really disrupting the market in China. And China with war, zero COVID policy and all that stuff. They're closing their finance, they're closing their companies and all that stuff just because they want zero tolerance on COVID. That is not the way to go about it now. And that's why it's going to affect factories, companies like Tesla, Apple, and most of the stuff we buy that have been produced from China. It's going to affect it. So the next quarter, I don't know what's going to happen if China keep doing what they're doing. Apart from what they're doing in South China Sea, the way they're planning and they're playing this game is not going to favor anyone at this point. And we have to be very careful. If you are really exposed to Chinese company, you have to be very careful at this point. So let's leave China issue around. Let's just go straight to the what I'm going to be talking about today. I don't want to take the time. Under 10 minutes, I'll be done. Right. So Tesla, right. Let's say Mr. A invested $1,000 in Tesla when Tesla IPO'd 2010. January 2010, when it IPO'd for $17. Today, let me tell you how much you'll be making. Today, you will have $147,000 in your account. Tell me if you had invested in index fund or probably S&P 500. Do you think you're going to get close to that number? Not at all. Let's go to the next one, Apple. Apple came out and people were like, early 2099 or something like that. People were jumping, before the dot-com bubble. Apple, this and that. And, people who invested that time, go ask them today how much they've made on Apple. So let's say 10 years ago, you started investing. And 2010, 2011, you invested $1,000 in Apple stock. Today, you're going to be having $18,400 in your portfolio. Think about that again. If you had invested $1,000 in Apple stock, 2010, 2011, you will have today 18,400. Let's go to the next one. The next one is Microsoft. We all know Microsoft. These are the company that are called disrupted. They are not going anywhere. Just like you talking about Coca-Cola, right? Our great grandfather, they drank Coca-Cola. They are no more today. We're gonna drink it at some point. We're gonna get old and die, and our kids, grandkids, are still gonna be drinking Coca-Cola. So why you not investing in companies like that, and you're just investing in random companies that are not going to last for long? So if you want to invest and you want to make money in stock market, forget about all those people that talk about investing in index fund, S&P 500, ETF, and all that stuff. They don't want you to make money. I will tell you how much you make if you invested in S&P 10 years ago. I will tell you at the end of this video. So if you invested $1,000 in Microsoft in the year 2010, today you will have $11,500 in your portfolio. Just $1,000, 2010 in Microsoft will return to you $11,500 today. Think about that. Next one is Amazon. Amazon came out, it went down 95% during .com bubble. People were like, yeah, that's the end of Amazon. It's not going to come back again. It's just it's not a disruptor. It's just like a fraud and all that stuff. People that sold out, they are licking their own now. But people that stay the course till today, guess how much they have it. So let's just say you didn't invest during .com bubble. You are like a millennial or probably Gen Z, and you are like, yeah, 2010 is still like, 10, 11 years down the line now. So let's say you pull $1,000 on Amazon 2010. Today, you'll be having $17,957 in your account. So the total of all these four companies, which you invested $4,000, right? You put $4,000 in the four companies, and today your portfolio in your portfolio, you will have $194,861. For just $4,000, you will have $194,861. That is no brainer. So if anybody comes to you and say, oh, don't worry, well, be careful this, be careful that, the only safe haven now is to invest in ETF, this and that. They don't want you to make money. And like me, I want to make money, and I want to stay with disruptors, with companies. I'll be telling you the next disruptors, the next disruptors that will be around, you will be making money if you're looking for the next 10, 15 years. I'm talking to long-term investors now. I'm not talking to short-term investors, because we have short-term, we have long-term investors. So S&P 500, if you had invested $1,000 in the S&P 500 in year 2010, today is probably going to give you, not probably, I calculated it, it's going to give you 2,020 cents today. So you just made over 100% of your investment. Is that what you want to sit down with? Is that what you want to be investing in? I think you're just wasting your time if somebody's telling you, or you're probably investing in S&P 500. You may want to play safe, but I don't want to play safe, right? So if you want to invest in S&P 500, yeah, do your thing. Do whatever you want to do. If you want to invest in index fund, yeah, Dow Jones, ETF, all that stuff. That's your own cup of tea. But as for me, I want to make money in the stock market, and that's why I'm looking at big company that I know will be around regardless of this, the bear market we're running into, or recession that we're going into. Even going to recession is a good thing if you look at it, because that's when you pick up this company, at a cheaper price that you never imagined you would. So why you want to sit down there and just be like, fold your hand and make 100% while you can make over 3,000%, over 100,000%? So people that invested in Tesla 2010, they've made over, 100,000%. Imagine investing, buying a stock of Tesla, $17. And today, how much are we talking about? We're talking about Tesla goes around $800 and something. So how many percent is that? Calculate it yourself. Now let's look at the different companies that we think is going to be the next disruptors for the next 10, 15 years. So I'll talk about some sectors, energy sector. Look at what happened in Russia, Ukraine. Europe is in trouble. Not enough gas to go around. People scrambling. Countries are scrambling around. Oh, 20% now. If I can get 20% gas for my citizens, I'll be happy for the winter. If I can get 50% of what I'm getting before, I'll be happy. We'll manage it. We'll ration it. So that is actually telling us that the future is going to energy sectors. We are looking at energy disruptors now. Solar system, wind, hydrogen, EV. That's where we need to be looking at if we want to make good money come 2032, 2033. Well, I'm not going to mention any company because I'm not a financial advisor. So anything I say today doesn't mean you should go and buy or sell any stock. I'm just giving you my advice. I'm just telling you what I'll be doing. That's why I'm sharing it with you. So another sector is tech sector, AI, robotic. Some couple of months ago before the bear market, people were talking about metaverse and how big metaverse is going to be, how NVIDIA is going to power the metaverse and all that stuff. Why not look at that? Why not take advantage when we have a bear market? The problem we have is when there's a sale, on High Street, when your JD that was sold for $300 is now being cut off by 50%. So JD that was going for £200, $200 is now going for $100. You see how people queue in front of a shop. But when it comes to stock market, people don't want to buy on sales. I don't know why. There's no brainer. People run away from stock. But when they go to the high street, they buy on sales, but they never buy on sales in the stock market. Well, I'll leave that to you. So if you're looking at these sectors, I've mentioned energy, I've mentioned tech sectors, robotic, AI, quantum computing, 3D innovation, and all that stuff. These are the disruptors in the next 10, 15 years. If you want to make big money in this area, these are the places you need to be looking at. And the last one is health sector. It's going to get to a point where machine AI, robots is going to be operating on people. It's going to be robots you're going to be talking to. So why not investing in those areas, in those places you believe this belongs to the future? Well, I think I've rambled enough. I'll leave you with that. Just think about it and invest wisely. Don't follow the Wall Street analyst that will say, play safe, invest in the S&P 500 ETF. You're doing that at your own detriment. So my advice today is do your own research, invest in innovation and disruptors. My name is Peter Arts. If you have gained something today, I'll probably love you to subscribe to the channel, like, and put your comment down below. And I'll see you again next week. Bye.